um, maybe one more move down to about this area to produce the 3Ls. But as you can see, the level held very well, and so we did not see any of it, which is good and bad. Let's take a look at the probability. So now there's a chance that we take out the previous
There's
high.
much I
And
can
this is
show
how it's
you.
going to happen.
You're
It's
trespassing. I
setting
warned
up to
you,
be
and now the guards are coming to arrest you.
it's setting up to be a bullish pattern no matter how we look at this. There are a couple of um, junction points here regarding levels, and I believe we're entering see the previous basically range here, which stretches to about 10K range, and I think we'll spend some time here. So right now, from a technical proper sort of viewpoint here, analysis wise, this would be considered a retest and a point for a short entry. Now, one thing we know about Bitcoin is that it does not really retest and hold. It actually rips through the retest points, and so I expect this to get taken out and we get put back inside of this channel. And we slowly dance around this line and we walk our way up. Immediately, what the market is looking at right now, if we were to consolidate here for the next week or so, is that we have a head and shoulder pattern building up, which would propel us higher to this level, helping us take out the previous high. Okay, as unbelievable as it sounds, this dip here, I think people who bought here and are still underwater, they are able to come out. They will be able to come out of this whole consolidation in a few days' time, if not today. Momentum here is looking incredibly strong on VVS. This is a 4-hour chart. And the next thing I'd like to point out is the OBV pattern where we had a triangle break. Remember this right here? We were really looking forward to this trade, and we had an amazing little run up here that brought us to the highs. So that looked pretty good technically. And then we had this area here, which was so smooth. It was hard to believe that OPV kind of faced this very persistent invisible wall, and it was so consistent and aligned with what was happening here on this price. And then we kind of fell here, and as you can see, there's a line here, and we're sort of below it. We're below it, and OBV is lagging. Price took a leap. And it happened a little faster than I would want, but
Farewell, then.
the market doesn't care about what we want. I think if we have a breakout here, then we can certainly look forward to much higher price points. Again, people are people are looking at this moving average.
You've always been too smart for your own good.
God damn it, where's that coming from?
And it's basically it tells us if you look historically, you know, I don't like doing this too much, but if you look historically here, we have dipped below this line many times before, and we retested it, and we were really snug around that moving average, the 50 moving average, a couple of times, and then before breaking above it finally. And yeah, so the retest here, I don't think this retest is actually a point for a short entry. So as always, I am looking to buy the dip when the opportunity comes. I mean, the fear and greed index was at 27. Hell, even when it was at 30, we were hovering around here. These are all great entry points, and even these wicks over here were great entry points. And people who got in here are just breaking even now. They had to sit underwater for a while, which is fine because these things require patience, right? Daily charts. It's pretty amazing that uh, when you look back, you see this whole window here. This is going to get reclaimed. Like all of this is going to get erased. All the bears gains here. I think if they fail to take profit, they snooze and they lose, and we're very close to. I think we may actually go to the 50 pivot point here at 55 500. So we're going to see that triple five at CP. This is a weekly, uh, actually monthly CPR here. So we might find some pressure, some resistance here. Now, considering that we're grinding up against this retest point, like I said, this could hold for a day or two, could push us back down. And now the good thing about this rejection, if we get one, the 55th level sometime today, is that this channel re-entry could um, either support us here when we come down and we kind of grind against it and eventually make our way up. This baseline reclaim would be too aggressive. So remember when I told you that I'm willing to go short closer to 60K? It is likely that uh, this could still be a place for me to do so. I'm looking forward to that. However, we'll see how price reacts to what's happening here. So right now we're at this point where we have a little bit of resistance. I believe that we're looking at this falling wedge, which is a bullish setup. And if we take the midpoint here, kind of get this line out to the breakout. So we're right at we made the target. So I shared some of the targets for us in the platoon, purple lines. They extend and um, go a little higher than where we are right now. So this is the second target that we're approaching now. I believe it was at what was it? So let me get to the bottom line. How we're going to trade this now that we have traded away from the lows, taken profit here, and what's to come. Let me just bring back that chart setup. A window like this, once again, it proves that indicator trading is superior. Question is, do you act on it, or this scares you? The 27 fear and greed index, 30 levels should excite us. The windows should excite us. The fact that we dump so hard and so fast should excite us. The fact that we're oversold on momentum here should excite us. And this is just the first candle. So I think we'll have plenty of opportunities to trade a continuation. We just need to overcome this one little point and go back inside of the channel where we will take a rest, reaccumulate, and do an inverted head and shoulder potentially. So currently we are at 54.7. Our next take profit target is 55.314. So that's just about the CP level over here. Okay, the center pivot on the monthly chart. Now monthly is a powerful CPR setup, and I don't think we get rejected from it. I think we just kind of stay below it, go back down slightly, and we have immediate support on the weekly because we opened weekly with the green candle. If this is a short setup, a bearish short setup, let's go to 4-hour chart. What are we looking at here? we're looking at the trampoline effect. We're looking at the dragon skin dip, which is our first, where we retrace all the way down to inside of the dragon skin on the 3-day chart. Now, on the 4-day chart, there was a bearish sign printed at sorry, I don't know why it's not showing up. But basically, this is a new low. So there's a diamond here. I don't think I have it enabled, but there's a diamond here. And if this is a short setup, which, looking at the baseline drop, reclaim, we need to play this this base retest in this case by getting into a position closer to around 60K short. So this would be something like this going up to here, to this mid channel for baseline retest, and this is our short entry because at that point, not will this only will only print an HC from the peak to the trough here. We're looking to overshoot it, overextend. So I think I'll be willing to 1x scale into this all the way up to the baseline, away from the center pivot. So it's very close. So once we're back inside this channel, I want to be on the short side, just because of what the indicator dictates us to do. It tells us to on the baseline reclaim. Let's flip this upside down. We need to have a retest point in order for it to be a short signal. So a retest point is when we drop close to or at the baseline and we get rejected. We go sideways a little bit and we go down, and then we might come back to the baseline. Meanwhile, this thing can and will start curving like this. And this is a short-lived dip. This dip can be bought. It will go back up, and so we will stay under it for a little while now. This baseline, and this is why I'm saying that we are looking at a range environment here within the monthly CPR. I believe that is what we're looking at. But for traders of market SPY system, again, we look back and somehow miraculously it performs. We have a dip into the dragon. We have the long-term trend flow here has not been damaged. There's no this dip means nothing. We still have green candles over here. It's a 5-day chart. There's a 4-day chart where we retraced all the way down. So it really helps to look at higher time frames and not focus on 15, 1 hour or whatever, and understand that holy shit, we dropped like these 4 huge candles, right? 4 days, one candle, 4 days, the next candle, another 4 days. Nothing just drops down like this forever. And as a result, we have, and by the way, this is 1, 2, 3, 4 flags. As usual, once again, this is it's time. It's time for us to cool off. But now we're looking to potentially retest the baseline, and we might even run it over and take out the previous high here. Remember, our target at above all-time highs sits at around. We haven't made that target yet. Right now, we're automatically painting a much larger bull or bear flag here, and it's not going to be up or down. It's going to continue to stay here. Okay, and we will do some serious damage here in the coming months in terms of price movement and volatility. So these targets, they have never been moved and are still expected. And there's a possibility that this overextension will bring us over to these levels. Now, here are a couple of curiosities. First of all, take your VWAP and trash it. All right, trash it and use it sometimes on lower time frames because we have used some key points like the Corona dump, the final impulse running over the 20K level, the retest over here, and the official dip and an overperformance cluster here using these VWAP points, which were completely neglected multiple times, never reached. So this target, as a result, we were supposed to go slightly lower here. Based on what I'm seeing here, we're supposed to take out this low and challenge this area down here, but it got stopped dead in the tracks. 47 round number, which is annoying as shit to me at least, because it's just when you tell people do not trade round numbers, then you look back and you're like, man, I should have traded that round number 57. Anyhow, 45, 47. 45 is what we were looking at for the longest time, and it got front run like a front run really hard here. So this thing, it's not holding, it's ripping right through it. So trash it. This thing never got touched. Trash it. This thing too early, too far away. Trash it. So these classic indicators are once again confirmed to be absolute garbage. Look at VBS here and the long-term trend flow. This is a buy the dip opportunity. Couple of things. Number one, weekly, we bounced away from the level and opened below. Now, this is why you have to be very, very careful and understanding of what technical analysis and when you're connecting. So you might say, why do you have this white line here when the peak is clearly here or here? Why don't you connect this to this somehow? And I'll explain why this is only a guiding, roughly like a guideline channel. It doesn't really have to be straight. I can move it down here, I can move it here. It's only telling us that we are within this range that we're trading, and that's all. It doesn't have to be perfect. So for me, this works. This is a great, as a matter of fact, by doing it this way on weekly, you will see that on lower time frames, it's perfectly connected to the peaks, and it marked as a resistance zone for us on our 65 target. Um, so pay attention to the bottom here, this grind line. So weekly close and open. Now, in order to avoid that little mess that we were in, where we had a tiny little triangle on 15-minute chart, all we had to do was wait for Monday weekly and stay long in the range and based on the indicator values that we looked at, such as the trampoline, such as the windows, oversold momentum plus fear and greed index, all of that. Okay, so no excuse. Now on the 5-minute, 5-day, you drop there and you see we close below it, we open below it. Interesting. You go to 4 and you're like, we never closed below it. We wicked down and we opened right above it. As a matter of fact, this is very strong support level. So here's your technical analysis. And it's trash. All right, no matter how you draw your pretty lines, they're only they're not precision-based lines. They're just guiding points to show you. Here's a 3-day chart. Ooh, now this is a perfect chart. So that any analyst can go back, look at this, and say, "I told you so," and they can choose a specific time frame to please your eyes and satisfy your expectations and desires, what you want to see in terms of Bitcoin's price. Where do you want to see it? And so here it is. On 2-day, same thing. There's no difference between 3 and 2. And we had this momentum curving up. The thing is, it curved up on this candle, so it's not like you're waiting for this whole candle to close before you go long here. But I'll tell you one thing. On the way to a 60K or above retest, I'm buying this candle dip. So I'm constantly having a ladder open constantly, so that yesterday, for example, you had to wait all day, and you shouldn't have been trading. If you were, then you probably got chopped up. we're looking at days worth of price action, which was absolutely flat, right sideways. Doesn't want to go down, doesn't want to go up, and today we have some movement. So based on this chart pattern here, we are back inside of the channel. If this was a parallel straight diagonal channel like this, if it's this thing over here, then we're just retesting it. So there's like this invisible, I don't know what the market is looking at, but this is when you connect all points perfectly and it's like, yeah, it matches. It matches, so you're satisfied with this. You want to see this? And this is telling you that it's time to go short over here. It's time to go short. To me, the indicator tells me that if you go short, you need to go short near 61K, somewhere around here, with a stop above the previous high. Then at the same time, you have the potential to eventually get rejected here, play it sideways, and then eventually go to the 71 level high that we have printed on this chart right here. So it makes sense that if we go back about that channel to this, and eventually this. So on lower time frames, we have a potential mini shoulder here, and another here, and another that's going to get printed here, which brings us to about the previous levels, and this will run up to this 60 to 61 level easily, considering that the majority went short and funding rates dropped, and it's still negative, and they're still accumulating and going short on this little pump. Most will be out too early, in my opinion. So what's in the way right now? Why no FOMO at this particular level? First of all, we had this weekly resistance or support indicated by, it was marked, but if you turn on your DSR and you go open high close on the monthly weekly chart, that's quite messy. There's a lot of, wow, okay, hold on. What a spider web. So first of all, we have the immediate resistance here is this 50 exponential moving average, which held as support and is now potentially a resistance. Then we have the open the previous week, which is over here, and it's also the pivot point. So it's a weekly support turned into now potentially resistance if we get rejected here, and I believe that there's a good chance that we will. In the short term, we see the orb that's, obviously it's not going to go up here and vertically through the candle. So we're approaching a very critical level where this thing is going to trap a whole bunch of people inside of this range, all the way up to the high potentially. But there's your weekly developing CPR here. You have your monthly pivot standing at 55 to 100. Then you have your open. So this open means that weekly open happened here, and so we're coming to get that weekly open as our high probability level, which is R2. Sorry, R1. So resistance 1, and at the same time, this is a daily chart, so the intraday has the potential to push all the way here and be met with a harsh rejection, I think, at around 55.5 to 56. At which point it'll produce a dip buying opportunity, where I will once again go long. Now, the long-term trend flow here is shifting to the downside, and that's not a good look. That means there will be pressure all the way through as we try to recover. And I don't know if we'll succeed or not, but targets remain a little higher than where we are right now, maybe double that. For the smaller time frames. Oh yeah, and the investor tool that is inside of DSR, according to the fib level, we stop at 0.618, which is the blue line. The reason why it's important to look at higher time frames here is because on lower time frames, that would drive you nuts. You'll be like, "Oh, we're closing below it, or we close above it." It's not that. It's if we could plot some thick line like this around this moving average, then it would look like something like this, basically, which is a range. In the last stream, I told you about the support here. So, like it or not, guys, I'm going to own this and say that I told you about the pump that is incoming exactly as predicted. But seriously, Marcus Spy
Fucking
is
jackass.
giving us a level, okay? This
Exactly
monthly
as
support. I
predicted.
told you that monthly is going to override weekly. So if it's a weekly dump, next week's candle open, we can perhaps see some positive action. And guess what? We picked up a wick over here, another one over here, and finally another one over here. We had to close for this to confirm. And if you were looking at lower time frames to execute a potential trade setup that was in the making, this was your entry point based on all of the above, right here. Um, so I think there's no argument here that technically you were looking at everything that you needed to go long. And admit it, staying short and kind of you know these candles with these spikes. This is a lot of stress. Getting in when everyone's done selling off, based on a technical setup like this, and getting rewarded with one straight FU candle like this is the best feeling in the world.
Right.
And so you should have been long unless you were physically not there to play this.
I think it's
Here's your
interesting
12-hour
earlier in the
chart where
stream.
we
He's like,
have
if you traded yesterday,
a
you got
confluence
chopped
of
up.
not only the
And then right now, you should have been long.
the fib level
Doesn't come
on
on.
the
What,
moving average, but also the 200
there's no way
exponential
anybody knew
moving
that was
average
going
on
to do
12
that.
hours.
There's
So
no
your
way.
day is split into two. We talked about splitting your daily candles into two to see when you're ready to make that move. So here's your daily candle split. The next half of it gave you a pump. And so we continued ever since. So we haven't really. So this is the first. I don't think this goes up and up and up. This white. I think we're gonna have a few tiny little breaks. Um, and this will become a range here. So can we see a double bottom? Let's pay attention to the lower time frames now. We have this. We have this, and somewhere around here we'll have another this. So
Oh,
that would be an inverse head and shoulder, and this is how we will.
break 60.
If we dump down to here, this is how we will go and challenge the previous highs, but fall a little short. We'll pause at around 61, or thereabouts, with a breakdown happen here. Reason is because we have a range volatility vortex that's held us once and now produced the level that we have to watch, and it's also the median of this whole channel. We bounce from the bottom, we go down, and then we go up to here. Okay, in the coming weeks. I'm certain of this. There's just I don't see. We're trapped in the price formation here. We're trapped in terms of how this is setting up to be. However, is this an overextended candle, and can we expect a little pullback to have the size? Maybe not have the size, but it's already, the market is already picking up on these little wicks, which are being held by the potential left shoulder here. In a bull market, and I don't believe we shifted over to a bear market just yet. I think this is the kind of setup that we're looking for. So somewhere in this range, we will have a little pause where we can accumulate for a continuation play. What if it's a short? Can it be a short? Let's go back to this chart once again, and now go back to a 4-hour time frame. zoom in a little bit, and see. So the trade was here. Okay, the trade was I don't know if you can see it.
Oh wow, that
Let's see
was
if
the
we can find
baseline
that trade.
reclaim. Bam. Right there. Bam.
Oh,
Wow. That's
one second.
crazy.
I don't know why there's no history here. Strange. Slider history. What about close P&L? So, anyways, in the platoon, you remember there was a little tiny setup dot that was located somewhere around here. It was somewhere around here, and the purpose of that was, I said, if we make it there, this will be our basically buy zone. Now it overextended and maybe freaked you out a little bit, but we were at the end of the day, so nothing to worry about. But this was the play right here. You have a reclaim, you have a retest. Market spy makes you feel bad once again and insults our intelligence collectively by producing new version. Radosh is predicting the future. Sykes is throwing spoilers left and right. Let's just save it for later, okay? The element of surprise needs to be preserved. But oh yeah, but it's supposed to pull from the exchange. I did just update Bybit Pro with a resizable window and everything, but maybe. So here we're looking at the Jackrabbit. So meaning, if you were long here, which obviously makes sense, we never sell the bottom. How are you going to sell the bottom after a dump? How do you know it's the bottom? Dumped enough. Hell, this was the bottom. Okay, I don't care if even if you're long here. This is going to get you out soon enough. So here's the thing, right? We had a reclaim, retest, jackrabbit, and we're setting up for a punch out. Now, for me, the next trade here, since yesterday we had no price action, I'm going to measure this for a punch out, let it register, let it come back down to the baseline, and I'll have my ladder scaled in. There's weekly and daily CPR support, and we're fighting this monthly, which we already conquered BC, coming for CP shortly, and then eventually we'll take a little pause at a 55 level or thereabouts, 56 maybe.
I can't believe I didn't see that. It was clear.
Now we have this breakout. This breakout is a little different. So because of if this is a falling wedge, right? On one hand, you can just take half of this range, put it over here, and say we made our target. It was an impulsive move, but we made our target here. But in reality, the other way to trade these triangle patterns is that you would actually, now this is not a straight line. These kind of measurements, right? Like the breakout measurement, it's pretty much a straight line. Maybe a retest and then an impulse and then you reach your target. And so we're pretty much there already. But the truth here is that you are looking at the duration of this to the breakout. So what I'm trying to say is that all this right here, this is now going to be the length of this line. I don't know how to measure it for you, but you're now going to walk your way through for the duration of all this. So the equivalent of this move is going to get walked through here, and it could be up, down, but the ATR range of this weekly candle is going to produce an equal move to the upside. This is where the potential inverted head and shoulder comes in here. And so we're buying a rejection dip around here based on that probability, based on that setup. That is what I'm going to be doing in the foreseeable future. And because of that, because of this reclaim and the baseline, until we lose this baseline, there's nothing to worry about in terms of the short setups here that we're going to somehow fail. Having this value moving average, the reason it's called value MA is because you're buying absolute value for our chart, for our time frame bargain buy right here. Now, value loses. It's not as attractive when we're below it and we're trending lower. That is not good. But as long as we're above it and close to it, we assess this as a good buy opportunity. So hopefully now you're looking back and you're thinking, why did I or did I not? So for those of you who did, you knew exactly what was going on here. For those of you that are newer to this, you're looking at this and this is your sort of reminder, I guess, for the future to take part in this, however small, and doesn't matter how you size up. But looking at these time frames and knowing that it takes day to play out, what's interesting here now on OBV is that we're seeing very little power regarding this. So I think we're due for a pause. Now, this is going to take some time. If it breaks out above this yellow line, then we can see that continuation, which will take out this shoulder as well. I think it's going to take some time to set up. And it's going to be very tough, and it could take weeks to actually go and challenge the previous highs because we have lots of hurdles to overcome here on the way. And so remember the setup is the same, and then we have news and sold or not sold, Tesla sold, he sold, she sold, whatever. The question is, what do we do? And we were positioned here and biased up, and I think this as a result, you should have been, and you have been rewarded for trading the setup that was right in front of you, no matter what the market thought. Lower time frames are noisy and things. I mean, we start from 8, 6, 4, where we had a reclaim, and all the way till now, we had a baseline reclaim. 1 hour, you had your. So that little spillover here, yeah, this is what it does. Remember, we talked about these setups where price goes down first and then takes out all the stops, basically. Because if even if you were long here or here or here, you lost because of this wick over here. And again, volume was not that impressive. This right here was the bottom sellers on this one. That's it. This range consolidation was reaccumulation, and now we pumped as a result of this. And then finally, you have your 45, 30, and that's your short entries, short time frames based on your play for the bigger time frames. So all of that, 1, 2, 3, 4. I expect this to correct a little bit. This is just a little. I don't know if it's a hot pocket correction, meaning that we stay here now. We went back up. I think this level here is something that people are not watching, and it has the power to actually. We had a couple of cracks in the shell. You know what I mean? few attempts, and yeah, I don't know how this is going to end up looking, but I'm buying the dip below. Once we lose the purple line, once we go closer to CPMBC, I'm starting to. This is where I'll scale my ladder. So based on this diagonal line here, I'm thinking like maybe halfway through, somewhere to 51 200, 51 300. So um, this purple line, this is my buy area at around 23 fib. Um, expecting a wick that is going to get rejected from falling lower. 30-minute time frame. This white line eventually will reach it. There's not a case when we don't. So we want to test higher values. Expect this to move lower slightly to about 55.8, and that's our next profit target in the screenshot that I shared in the platoon. And we're not necessarily going there up now. We may, but of course, after a pump, you know that buying the dip requires us to wait for the setup to come our way. So that could take days. Yesterday, personally, I was waiting for all of this, and I made like $50, and I spent 12 hours just babysitting the chart, and there was nothing. It was just not doing anything. So now we had a little bit of a move up, and of course, this is tempting to people who were not positioned long here in this range. So that's what's happening. So we can expect an impulse for the duration of this falling wedge here to go up, not a straight line. There's lots of resistance here, so all the way up to 57, anything is possible. But if we dip below, I think it won't be as aggressive, and we're looking to track this baseline at 51 200. This is an 8-hour time frame, so expect this to take some time, but we're trying to see if in the next 16 or so hours we can go up and maybe have a swift little correction here, which would produce that shoulder. And we want to be long over here. We want to be long at between 53 and down to 52, 51.5. I don't know, anywhere there. So I'm casting a ladder there, see what I can get on picked up there for my position. And then I'm going to wait for a decent little setup, maybe on 1 hour, see how the baselines behave there. This was a very swift recovery, so we pause and we don't do anything for the next little while. However, VVS is looking great across all time frames, and it has incredible power so far. Even in this like little consolidation range, there was nothing too awkward about it. But yeah, you're not trading here. I'm not. You shouldn't be. Wait for a little. Wait for it to do something here. Let it come down a little bit. It's still below the baseline here, hitting the top. I would say this is a short, but I don't want to get into a short. I mean, I wasn't short here. I wasn't short here. Why would I be short here, right? So for me, this is just a sign of, hey, do we have maybe a potential for it to slowly creep lower, maybe a little bit, then go back up, and then go back down. And that weekly, the way we open, the CPR is directly below us, and so is the daily. And so this is my range here closer to the purple. Let's look at the 1 hour chart. And basically closer to the purple line, this is a long territory. The scaling in happens when we drop, and we can't stay that far away from the purple line. We cannot. It's a daily candle, and when we have to come very close to it. So the next little dip that is going to happen is probably not going to hold the dragon skin here, as it's going to. I know it looks like it's curving up, but can we expect this to maybe come down here and then continue to go sideways to do the same thing that it did here, and then eventually drop? And this is where I'm going to go long for a bounce, and I will say that this time it might actually give us a little trade here and go a little higher. So that's my plan. So I'm not doing anything until then, but I do have a small ladder that picks up a number of contracts here consistently to so I can sell it as it moves up. As soon as I hear the sound, it goes boom, 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 boom. I go and sell it over here. Uh, so there you go. Like this tiny little contracts just in case. But a recovery like this with GPS dots on 12, 15, daily little curve up here, PVS starting to look good. I think, um, yeah, lower time frame is head and shoulder potentially. This area at 52 is another potential grab. It can also serve as a double bottom, maybe, and then that will allow us to move higher. So for now, I'm waiting for the dip, not buying the dip. Fear and greed index is it's gone up now a day later because people realize they sold the bottom on Monday. They bought. They're gonna freak out, probably sell on Tuesday, and on Wednesday we should be on our way back up again. So
Okay.
that's your core play, and if you traded this, I mean, congrats because there's nothing. People say you can always look back and make the case for it, but I mean, the case is setting up in front of you, and this is also this right here. This is not. This is why you can't have any stupid traditional methods in play here, like stops. It's basically you're long the range, and that's it. You're long the range. There's no stops. There's no going lower. Even if this was to go down to here to 43, it would still recover back up to these levels. But it happens sooner. You're simply long this range because we dumped once, twice, three times. We're not dumping four times in a row in one straight continuous candles that penetrates the dragon skin on 4 day, 5 day, weekly, 3 days, 2 days, has a huge ass window open on the daily, big square, VVS acceleration, no strength on the drop over here, unlike here when we saw the drop it was happening. And so this is a fake out, take out the stop play by exchanges, liquidity provides whales, whoever the hell. But it was a simple baseline retest on 4 hours. That's all you needed to wait for with your orders sitting there where I had marked the yellow dot somewhere around here. This was your buy. Basically, your buy was at this low right here. 2, 3 candles later, if it's not going your way, you close the trade. We literally had to wait for one more candle. Second candle, you're massively in profit. And all of this, you don't care about this. This, whatever's going on right now, it's leftovers, and we need to wait for it to come down. If it comes down from here, we'll buy here. If it comes down from here, we'll buy here. And that's it. We have to wait for it, guys. Simple as that. So, great lesson, great setup, and one more confirmation that no matter how you draw your lines, they're just guiding points. However, follow market spot because it gave you a setup. It gave you a play. You had to be a little patient with it, and it resolved as expected. And you had to wait 1 day for the weekly open. If you were shorting or longing right before that, and not during the opening of the daily candle, which was what did you have on 15? I don't even know. Take a look on 15. Drop, 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 drop. Pop, reclaim. Just let this reclaim was small. This reclaim was decent. This reclaim was really nice. This reclaim gave you all that. So yeah, there's not a reclaim that failed. This reclaim, short, decent trade. This reclaim, short, decent trade, continuation. And so I don't short. I wait for it to give me a long signal in your baseline in order uh, to be a good confirmed long. You just see this wave over here. If you have a reclaim, like it can't go lower than that. Can't go lower than that. So, anyways, good trade, and Bitcoin did what it did. This is the regular guys getting smoked by looking at these low time frame candles and they're thinking, "Oh, that's it. It's over. It's over. It's going down." It came for the liquidity here because it wants to go up. So before going up, it needs to go down. Before going down, it first needs to go up. So it needs to go up so it can go down. We're waiting for that correction because it wants to go down. If it wants to go down, we're sitting here at around the purple line. Go back and see what that means, what the purple line is, and why it's important to be volumetrically volumetrically based around the purple line when the impulse happens, when the drop comes, and why we're around the purple line as our approximate target of pick up and go. This is EQ2, equilibrium zone 1. Why are we not relying on EQ1? Because we had some here, we pumped, and it's actually opening up. It's opening up to be this indecision. So we will eventually come back down to the CP level where the purple line will be, and it will also be like this level over here, somewhere around here. So we're buying here, expecting a little bounce, see what happens. It goes lower, we're buying again, selling it, and then it prints a potential head and shoulder here. Traders look at it and they squeeze the market up again. So that's my plan. And that's it. That is what I'm looking at, both indicator and levels. This thing over here, like I said, watch this junction here of confluence of levels. We made the target out of the triangle pump in a straight line almost. We're now looking at a retest point where this is considered to be a short entry, or in other words, we prepare for the dip closer to the purple line again. Purple line sits at around HC, target from here to here, just about there. You also have your EQ3, which is not showing us a market shift. It doesn't happen like that. But what will happen is that we chop through here, and through that chop, we're long and we're selling back to the previous retest or this consolidation range, which will serve as resistance, this orange line. And so we're long selling. It goes down, we're long selling, we're long selling. Maybe it spills long and then it goes up. So that's your setup. Unless, like Alessio Rastani says, unless we see something different, he says all the time. So I call that guy Alessio Rastani. There's a YouTuber out there who likes to recall his righteousness from a few months ago all the time in every video. But many people reference him, so I had a chance to get acquainted with the man. And so unless we see something drastically different, this is the setup that we're playing. I should learn from those guys. They always cover their naked butts just in case. They highlight the right and they ignore the left. What was wrong with the setup? And when Bitcoin does something like this, they act surprised. They're like, I did not expect this. I did not. Of course you didn't. That's the whole point. And if you're long derivatives, derived price of Bitcoin spot, then you should know. So here we have a crossover that's coming, right? This is going to take some time, and it'll pull us back down to this baseline. Again, this is just around. I don't know if it happens immediately or so. We're gonna have this. We're gonna have this. We go below it. Move along around here. We go back up to it. We will sell, and maybe it's this, we look at the previous low over here. We take that. Maybe we position ourselves to go long again. And so that will be a little challenge for us to start getting back up on our feet for Bitcoin. So it's going to take walks here in the park, wasting your energy 100%. So don't follow this. Wait for it to drop where it makes sense. Since we had a retest on 4 hour and it played out, 6 hour did not have a retest. Guess what? It's coming. Now, when that retest happens, we will have a little bounce and produce maybe a little W there, and then be able to take it from there. Not right now. So just wait for that damn setup to come your way. Have your bids be ready. CPs when you're casting the ladder down to the baseline. Baseline is when you start adding some single limit orders that are a little heavier in nature,
Juicier ones.
and you're trading this range over here because this dump and this pump was kind of a void. So it's going to reproduce this again here. So please don't cause that. Don't add unnecessary frustration to your life by staying in the range and trading it where there's so much greed and fear right now, where everyone's like, what's next? Don't be a part of that crowd and stay the hell away from it. Wait for it to come back down. See what it does. Again, CP, there's 52.5. There's a value line. I can't give you precise numbers because it may overshoot a little bit. It may go lower, but it's just going to dance around here for a while. We had 1, 2, 3, 4, 5 flags now. These waves don't continue forever. These blue waves, we're gonna see a little gray wave soon, somewhere around here, and be ready to buy that. Be ready to buy that when it happens, and then stay away from lower time frames for now. Just look at the bigger picture here and see what's happening. See if you can identify divergence because that is going to take its time and it'll play out, and you'll have your trade opportunity there. Look at this. It wants to go down, but there's so much greed that it's refusing to. Like this is not. It doesn't want to. So this is a very
You
annoying
cannot
kind of thing
compare
to see
this to
when
your
you have
neighborhood
like
whore.
crossover, but then it's like meh, goes up. Um, but yeah, there's a little bit a level of rejection there, and my punch out strategy here would be to measure all this, which is I'll choose my 4 hour time frame as the time frame of choice. Remember, the first green candles, you're gonna have a drop. You're not gonna have a continuation green candle setup, most likely after this. So wait for the setup. We're gonna have that scale in coming our way soon. And if not, let this thing go up and see where it gets stuck. Let it go up to here, let it come back down to here at a very solid level in that case, and then we go for the all-time high once again. But when it's just fragile like this, it's had this operation, it's had its guts open wide and put on the operating table. They stitched it up and it's in the recovery mode right now. It can't really walk with that same confidence. You understand? The
Yeah.
market is terrified. It just puked and then it farted up, and everyone's like, "What's going on with this thing?" Right? There's like some issues with this patient here, so we need to wait for it to start losing pulse a little bit and life support it again. There's really something about being underwater for a prolonged period of time that grinds you down. Best way would be to set and forget in this case, as long as you're safe from liquidation. Yeah, exactly. Because you're attached to the charts at that point. You keep checking every 5 minutes. Is it above your price level? Is it above your entry? And so it doesn't really matter. You can count on volatility to solve that issue for you. You have to out be more patient than the market. The market can really be patient, which we when it's faster than our patience, when it's more patient than our patience, we call it irrationality. We're thinking that the market doesn't make any sense because we've been waiting for days and it's not doing what our technicals are showing that it's supposed to be doing. But really, if you wait one more day, one more candle, then suddenly you understand that hey, um, I'm actually being impatient. So wherever you are here, we're coming to get you out from that underwater position if you have one. Um, like I said, it's about like price attacks you, step away, step the hell away from it. You know what I mean? And get it when it's weak, when it's exhausted. This is a beautiful freaking setup here on the baseline, on the jackrabbit, whatever. I keep telling you guys, we just don't know how high it will go. But a setup is a setup is a setup. Once
Right.
you trade it, you take profit, you let that runner be, and that could reward you. That could end up being the trade of the day, and we wait for them to come our way to happen. So, beauty overall. Let's 1 second.
He just said 1 second. He's so fresh, huh? New pod, new filter, good juice. It's nice. And this brand is very light on the lungs. I don't know what it is, right? When I'm looking at the chart, it's like it's so hard to like understand like where the move is, then a move happens, then I analyze it while I'm analyzing that. It's getting ready again, but when I watch him, it's like it's clear as day. Remember I was telling you, go up to this line, if it falls under, don't buy it, wait for it, and if it doesn't, now buy it. This massive dump going on. He's on the 4 hour chart. Baseline crossed up over it, couldn't hold it, crossed up over it, retest, buy it, take profit, coming down to retest again, closed above it. That's a valid retest. Buy that bitch ASAP. So obvious, but in the time you don't see it. You just don't. But it's good that at least the idea's in my head to know to look. Check all time frames for retests. That's the first thing I need to do. every day. Check all time frames for retests. What's the price doing? Is it retested? No. Are we falling? No. Are we trending? Yes. Or excuse me, are we pumping? No.
This is thick.
Yeah, right? It'd be really good like grilled cheese.
Oh, yeah, it's this is the Safeway bakery.
Artisan. Ooh, that would be filthy. It'd be so sick if there was some way to like cut out a little thing right here, and then like on the bottom would be like it would look like this, and so you'd click a button, and then the table itself would just and it would produce a little rail. And
Oh
you
my
can just, like,
god.
like it'd be so sick. I swear to God, these are the coolest fidget spinners in the world.
I need to get one. Something to fidget with.
Once you truly like, at the start, you literally just go like,
No, previous days low. Where is that? Hold on a second.
and you
Hold
just don't get
up
it. But
for a second.
eventually, you'll realize the pattern of forward, back. You'll
This
just
is
go like
not.
forward, back, because you need
That's
that
a wide
momentum
range
to
from
get to your
CP down
hand.
to here.
And then
I
while
don't
that
think we
momentum's
make it
coming back, you just
in
tilt,
there in
and it's
one
gonna
shot.
want to go like this.
So
But that's when you push and do whatever. But once you just understand this motion, they turn
but okay,
into a
Sykes
totally
got it on
different
lock.
like
He understands.
funness.
They understand that this is
Kickflip to
this is what
nose
we're
grind.
betting
That
on
was
right now.
sick.
There's still red candles. We're still yet to see white, green. Now
It is-
imagine what
yeah,
that
there
means
should be some left.
for something like a
How
daily
many did
chart
you give me?
where we haven't had
Long
any red
time.
candles
Does it? Yeah, it was over a month ago when I
in a
got
while,
them.
except this
I
year.
didn't take
So
any
you
pictures.
can expect some
Okay, like,
really
yeah,
really funky
before I went
price
to
action.
Vegas,
This
I was
is
gone like 6 weeks ago.
it's you know, as soon as you get a little bit of white, I think green it's not going to be. We already pumped by 5K pretty aggressively, so a little pause and
No, I don't have.
then we nib on that. We pick up a little bit of something there.
I don't know.
Technically, this is until baseline reclaim. This is a short setup in EQ2. A lot of sellers are going to hit hard at 56 level. There's support and resistance here and here also. So within the 76, if we pump up there, there could be a short-term short opportunity there, which is going to be very rapid and give you good returns. If this baseline reclaims, it's also not going to be sustainable because how aggressively it went up. This is going to be a fake out. So I don't say this, but there is a short opportunity here, and I might actually get in on that because see how we drop here, and the retest would be somewhere around here, and this is going to take forever. Okay, in the coming weeks and days, there's going to be a lot of unbelievable up down sort of moves that are not really consistent with any sort of continuation pattern that can be identified here. Consider that this wedge here, if this is a breakout, that we usually go for a retest. And if we go for a retest, that means our short position is somewhere around 56, back down to CP. Over here, we're even slightly lower, and then another push up, and then maybe a double bottom here, things like that. So this has just entered a long-term trend flow territory. We have slight blue. We don't have bright blue like we had over here, where we had consistent sort of maintain an uptrend here, even though it was flat. It was signs for us to go up. Now this short-term trend flow has not crossed the zero line ever since the dump, and it will not anytime soon. And we also have this yellow thing over here, the delta, that could actually reset us a little bit. and then start pushing up again. So look at our EQ2 resistance, EQ1 resistance, EQ3 support. So we go up to these levels and we take a pause back inside this channel. What I think Bitcoin likes to do is it's going to go here and then grind here along this line and maybe have a fallout from there. Okay. But I can't recommend and say that we should be long here unless you're just scalping small number of contracts picking up. So you see there's like, that's what I mean, like it moved by 300 points on a little ladder on this little dip over here, right? So I'm not even waiting for I'm just gonna get rid of it. And I have 50,200 ATR, which is 800 points. If this is support, basically if this was a little flag over here, right, then we can expect this thing to come back down. Maybe for a retest here. So I'm casting that ladder for 200 with an average point entry somewhere around here. Let's do it again.
What the fuck?
BB Turbo, you know, break-even traders can take pride in that because there are very few people who are break-even traders. The most are losing traders because of that impatience. That's what it comes down to. So if you're able to break even, that means you're, you know, that's you got to be a ninja here, and ninja means patience. That's that's why they're so cool, and that's why they do things. You know, if we were like Mortal Kombat fighters, our arcana to unlock would be patience that surpasses Buddhas or something, you know, where we could just be still for a prolonged period of time and ignore the itch. And also, right? Nothing wrong with opening a few contracts based on the setup just in case. So, for example, right here, if you were to go short, let's do this. 15-minute. Let's take a look. I'll show you something real quick. So check this out, right? Reclaim, right? Short entry at the baseline. Now you sit there. Now this went up and up and up and up against the baseline. Came back down. My thing is, if I went short here, right? Which you know, remember we talked about the first jackrabbit here is in the dragon skin is a long. We had a specific boot camp and my warnings about how the first dip into the dragon skin with a pyramid inside a Q1 is a long setup. It is also a short setup where you go short right here at the peak. So you went short at 53.60. Let's assume that you did, right? And what you have to understand is that if price moves against you, even though you have a setup, but it's not playing out, you have to exit. You have to put your buy. You cannot, when price comes back down for you, the market is giving you a chance to correct that initial entry, bad entry mistake, and you go out break even. You collect the fees and you get the hell out. That's it. And you say to yourself, okay, I'm grateful that I was given the opportunity to close this trade. at break even, got paid in fees, and that's it. I'm waiting for the next setup. Next setup, you have short signals now where the baseline is squeezing, all right, where we have red flags, we have a whole bunch of short signals, right? The pyramids, and you see the dragon dragon skin is very thin over here. In the last shorting video, we talked about how you wait to go for an entry at the baseline. Baseline entry happens a couple of candles later, it drops. You have your profitable short setup. It doesn't mean that you're looking at this pump and you're like, I'm short and it's going to go back down. You know prices don't move that way. But if you did that, if you went short here and you went to, what's the magnet here? The white line maybe, EQ2. You see this pink line over here, any sign of resistance. If you exited the purple line, that's a $700 move. If you exited at the bottom of the dragon skin at baseline 2, that's a $500 move. If you exited at the bottom of the pink line as you take profit target, that's a $1,300 move. If you exited when you had a green square print here, that's a $700 move. So the system gave you a profitable short. That's it. Does it match the ATR of 235? Hell yeah. 3, 4, 5 times that right here. So this short signal, this entry gave you a profitable trade. This short signal, this entry gave you a profitable 1 ATR trade. You had to exit this though at support, at the first sign of support or the first sign of resistance. How about this entry, short? So you can see prices recovering, right? And we have a short here. Okay, so you wait for a baseline retest. Now the baseline retest here, it jumps above, it prints a mag 7. Mag 7 that is at, it wasn't really perfect, but you're looking at dump started here. So this red line where long-term trend flow started to break down, it had a period of 9 hours. In 9 hours, price is not dumping and you have a, well, let's say you decided to go short once again on this signal and your entry was here and your target was maybe down here. It did not play out, it went the other way. What happened here in terms of your stops? Well, if your stop was here, $300 later, you're simply out. Stop here, $500 later. Stop here, $588, and stop here, $725. Okay? Each one of these stops, the risk pain would give you an appropriate sort of level to size accordingly. Okay, and if you're not sure when we're at the tail end, we're closing here and price is just not going down. Remember, a short signal like this, where we have a couple of candles that go sideways like this, we have to question say, well, why is it not going down? Because it needs to spill, then go back up to be a valid signal. But it printed a short 1, 2, 3, 4, 5, 6 candles later. We don't have any sort of continuation right after this candle for this to be a successful retest. So we wait a little bit. And then, of course, you realize at this point that none of these candles was a baseline reclaim to the upside, but this one was. Why? Because we pump up. We have 1, 2 candles that are closing above the baseline now, and momentum is rising, and VVS is blue, and long-term trend flow is picking up. So you're not really left with many choices but to go long here. So you had 3 amazing shorts, 1 stop loss, which in trading, if you're not getting any stop losses hit, it's impossible. That's impossible. Sure. So you get 1. This is you looking at 15-minute time frame trading for a reward of 235 minimum as your distance to take profit target. And then you're adding, managing it, and maybe extending this ATR range by a multiple of 3s and 5s. Here, however, you're looking that you had 1, 2, 3, 4 points of testing, and then when you have a bullish signal right under this resistance, maybe there's a flag here. You start questioning, and you're saying, well, maybe there's a flag here, and if we break out, what's my target? And you're looking at this thing, and you're saying my target sits at around 50, which is previously weekly support and resistance line. Let me show you the 3-hour chart. Weekly resistance and monthly pivot. So it has the potential to go and tap that level and get rejected, if not sooner than that. What's happening on the 3-hour or even the 1-hour chart? Let's assess. We know that after about 3 to 4 flags, we really start losing momentum, and that before shorting, we should make sure that we have those flags in place, because we've only had one strong momentum wave up. Now we're building the second strong momentum wave up. On the sell side here, you have a retest, but at the same time you have that breakout consolidation trade, and we're grinding up against that line. So you know that the next impulse up will be an overextension of this. But you have one flag, you're waiting for the second flag. You can expect another flag pump and a third flag pump before this exhausts. Okay, we've only had one. We go back a little bit and look at this uptrend here. We can see how once we begin our recovery, we have 1, 2, 3, 4, and then we have an exhaustion point. Okay. 1 post pump, 1, 2, 3, 4, an exhaustion point, and then these are kind of like little recoveries, single flag short signals. But at that point, you're looking at not setting a higher high for the flag. Each one of these flags has a higher high. That's why they exhaust. This one prints a flag, but it didn't make a higher high. And so that's a warning sign for sure. Same over here. Peak breaks down, lower high, peak breaks down. And we are just looking at our first flag here. So you can expect 3 or 4 more of them, these bastards showing up along the way. And that could potentially bring you up all the way up to like the 56, 57 level, where we're going to have a little pause. So your fibs for the day here, we're closing above 22. What is it next? 30, 38 or something, 50, 61, 78. And so these are your expected targets next. These are also the targets that were marked yesterday on my chart, shared in the platoon. So
yeah, you know me, I stay in the club.
How high will this go before we exhaust? But it doesn't matter, because this is not a call to go long. Unless you were long on the checkpoint inside of the dragon skin, you have been rewarded already by 2.85% here. So I have been scaling in slightly
with the
in this range, and accumulated a little bit. Okay, and that's pretty much my comfortable daily sort of target, about 500 worth of Bitcoin, thereabouts or more. And so now I'm not worried to chase this, but I shared a plan, and the plan is to sit patiently and accumulate on the long here as long as we're inside this dragon skin, as long as we're not thinning out, like where the dragon skin becomes very thin and prices like really close. That's when we have a breakdown, and I'm going to cast a ladder or a single limit order on this purple line 2-3 days from now. I don't know, maybe today. Get in and wait for that reversion to the mean. But for now, this is what you're looking at, and this is what you're doing. Every time there's a dip, you're casting a ladder. So for these little short and long setups, even on the 15-minute chart,
is getting the screen reporting from the
we have people asking what's next instead of getting in, placing a stop loss. So how would you do that? Well, you get in. Since there's no wicks above here, your stop loss is literally right above the entry of where you get in. Now, you can do this with one contract. You can do it with 1,000 contracts. So you can do it with 600 contracts or whatever the hell. But this this makes you practice. This makes you trust the system more and understand. So the more you do this, the more flexible and you become. It's easier to now start playing with larger size when you're comfortable. But give it some time, and instead of waiting for that big break, how about doing smaller trades? If instead of just watching it, and guessing where this is going to go, because we don't know. The market is the market, and it does what it does. But as it starts moving up like this, as you can see, look at that 50. So let's go and get rid of that. Sell it if we can. Okay. Now, after a slightly bearish range like this, I don't trust this move at all. So I'm not trying to cast a ladder immediately. I want to see what it does in the next couple of hours. Maybe some candles here will help me understand where we are. So I think we pump to the middle of this candle, or we reverse right before. So there's like 4 hours here, 4 hours here, 4 hours here, and 4 hours here in this daily candle. And to the middle of it, we ought to get some action here. Okay. So until then, I'm going to set this to 240.
What the fuck? There it goes.
Okay, yeah, it looks like these are two breakout candles, and we go to higher time frame, and I'm not seeing top volume here. I'm not seeing any top volume where this would mark some sort of peak. Maybe, yeah, it's coming in. It's coming in slightly. But yeah, this on the 1 hour, this looks good. This looks good. I will cast another 2 hour ATR ladder here and trade this range until it doesn't work anymore. At which point, if this goes down and doesn't continue to go up, so if this squats a little bit, goes down, gives me an entry, it'll probably bounce. It'll be another profitable trade. It'll bounce like twice the ATR probably on a good spill. Be able to sell that, compress a little bit, continue casting the ladder. When it gets thinner and thinner and thinner, I know a drop is coming, at which point I will wait for the drop, retest of the baseline, put a stop here, go short, and take profit at CP, where my exit would be on a short. And this also calls for an entry. So someone else's exit is our entry. Someone else's stop loss is our entry to go long or short, depending. So this could very well, on the next candle, this could print a doji reversal, okay? Hanging man pattern, maybe this goes down a little bit to the previous level of 54 now, bounces up again, and maybe the next candle will have a little spill. That's when I'm buying closer to the level, purple level over here. I already have my box. This box was our support from a long time ago, and once again it will probably serve as support for us today. So that's the plan there. I don't know what else to say here, because this is pretty, I don't want to say easy, but you can make it easy for yourself by speculating less and acting more on what you see directly. And spend less time on Twitter listening to those clowns like Musk and everybody else, looking for reasons as to why more things are happening. Doesn't really matter. Here's a 12-hour chart. This reclaim is very aggressive, very aggressive. So if this goes lower, closer to CP, I don't think so, because it would lose the baseline, and you know, we may have a little volatility event here that is going to go up and down in a big way.
I'm just looking for the neck.
Structurally, this
Stupid.
this crossover has to happen first, and so before that happens, we will chop through, and this chop through here will show us if we're able to actually recover from this and go above EQ3, in which case we resume the bull run, or we chop through it, and at the end we fall out of this channel and print a double bottom, one more pump. And so this is going to be a long journey for us, okay, in terms of are we going lower, are we going higher? Not a straight line. So I wanted to tell you about this so you can recognize it and be positioned accordingly. During these big drops like this, you're building your position, right? You're building your position here, wherever, in the anticipation of this, okay? Smaller moves. Now, also look at this. This kind of these white candles. These are overextended. Okay, this pump is the exhaustion point. This is an overextend. You see this blue dot over here. What happens when you see a blue dot? Anytime when there's a recovery attempt like this, when you have these candles looking up like this, you know this is going to crap out, basically. 100% this is going to come back down to HC. So stay long at those levels and wait for this to happen. This cannot just, you know, it's going to keep going up until it can't anymore, and it's going to drop, get sold off, going to get picked up again, and resume. That is exactly what we're looking at based on this overextension. You can see how this is greed. You can tell so by not seeing like consistent little moves like this, for example, right? Which there's profit taking, there's buying. There's just simply longing this candle that they did not long here. They're now longing it here, and this is what pushes the price up right now. This is not organic. This is going to take a little pause, come back down. When it does come back down, we want to buy. This needs to reset. These guys will get flushed out soon. So this is what we're looking at. We want to make sure that we catch that. There's a little bit of a window, even though it's closed. These wicks over here will probably give us a chance to go slightly lower down to CP. And this will take some time. And watch this baseline continue moving in this direction here. When we cross it finally, we will find some pivot support at this level, 52. And then from there, we can long again. So around 52, this is what we're looking at, okay? For our next major long position, in my humble opinion, okay? And that's it. So good luck and Godspeed. We can do this. Just have to wait till they all murder each other here. And then we'll sneak in when the time is right. For the punch-out strategy, I'm looking for hours. Let's do this right now, since this is pretty much the only option for us to see how and when we can scale in. Okay, so here we go. Let's bring our stars over here, and we get the trend base extension 1, 2, 3. We have a punch out that it hasn't closed yet. It hasn't closed above there, so we don't really have it. But let's consider that this piercing of the upper level is signal enough, which means on the next candle we will likely to start filling in this ladder. So for a punch out ladder like this, go to the low of this candle, right where it is right here, maybe at the previous peak consider these two candles overextension. So from here down to about here, you are in the $3,000 bracket, which is most likely not going to get filled all the way through, but you're looking to basically play this range here and get a number of contracts filled, if at all possible, using this this setup. Or you can go long right now, size accordingly, and put your stop loss at this candle over here, the one that triggered the green candle, which would be at 52,112, which is not recommended because the upside now is limited compared to like this pivot low over here, right? So there it is. There comes the punch out rejection. So we're gonna start filling up our tank here with contracts. This is what I'm looking at. This also adds another layer to go long and how to go long within this territory of the punch out strategy. So we will see. Let me cancel out the contracts. We will go to the high of, so the window, let's assume the window gets closed. Okay, this little window gets closed. Okay, on the next candle open, we see 5493. Let's make it 95 just to look good. And then we scale all the way down to the impulse here. So HC sits at around, what was it? Use this candle, not the wick. Down to about here. So on the fib punch out level, that is yeah, 5-2 level. All right. So we go to 5-2-0-0-0. And then we have this extra extension here for the stop loss, but I want to get a bigger ladder fill on here and not worry about a stop loss, because this is just my mark here. As you can see, this is a local sort of like a high here in the range, in the triangle. So this would be a retest not only of this white line, but also perhaps of this support here now. So if that's the case, I'm averaging out, if I go underwater here, I'm averaging this out down to this level, quickly exiting that position 90% and keeping my 10 running for a continuation pattern. But from the looks of it, maybe something like this. Remember that we are counting on a shoulder play potentially, where when this level finally breaks, we go up to here, 58, 59, thereabouts. There's stops here still, and we have to take them out, and we will by doing this setup. So give them a relief and then go off and take care of that. So okay, so let's do this and go long on not counting on everything to be filled. 52.6 is my average, if that is the case, and off we go.
Right now?
Okay, now we wait for the punch out strategy to play out and give us an average entry closer to about this level of 52.6 or something, basically close to this dot. And if needed, we will have more to ladder in closer to the baseline. I think baseline holds, and the reason that is because it needs a long time to before we have a breakdown to see a possible short correction. So not yet, and this is how we scale in. All right, the plan is in motion. I will come back in 4 to 8 hours from now. So 4 hours dropping, another maybe 2.5 spilling over more, then a recovery, 8 hours. So 6 hours from now, we should have a profitable trade on our hands. And if this thing continues to go up, well, I don't know what to tell you. I have a tiny position here, so I will not close it now. This will be easily averaged down by 9 times the size in the ladder or thereabouts. So 1 to 10 is pretty good. You can get really close to your entry point as desired, and this will continue to, if this continues to creep up, I'll sell it closer to the EQ3, which sits at around 56, which I think will be met with some heavier resistance at the 61 fib level, somewhere around, yeah, 56, just about there. And this is going to take time. So while this looks higher, in the next 4 hours, this goes here, and this continues. We have one more candle that is going to maybe overshoot, and then we have a little drop, and then we'll see. So also for the punch out strategy, if we get a white candle, it's okay. We want to be sure that we don't have a white candle in the range while it's tapping the 1.5 Fibonacci level. And so far, so good. So if we get a white candle here, another red, it's fine because we're trading this green overextension here for now, where we're expecting a slight rejection. Where is that rejection happening? Right here at this level of junction of levels. There's a couple of them. There's a couple of things going on here. Quickly shift over to 5 days. We can see the window is closed. Boom, that level retest. This window is still 4 days, has a little bit of space left. We'll move down, will be closed if we get rejected here. This one just closed it, so we have a rejection. 2 days, just closed it, so we have a rejection incoming. Now, I'm not saying that we go down here directly, but like I said, this is EQ1. Sellers will step in at around 56 plus, 66.5 max. This will not hold in, then we get a rejection. According to how the system works, if we conquer the baseline, I would consider that a fake out reclaim. And if it goes really high to 59 to 60, I'm automatically short. If it happens somehow like now, then it's gonna get stuck there and make you think that you went short too early, but actually going to go sideways, 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 and then we're going to have a drop again. So that's my plan. My short is very high, and yes, I'm thinking about shorting. And my long is based on this rejection, second attempt progression from closer to CP, HC of the candle, and yeah, that's the plan for now. Doji. Yes, if we print the doji here, the next candle will be a spiller, and we'll need to pick it up. Because if it spills like this, you know it's going to print a wick and instantly go back up to the HC of the candle, and then that's going to be another $2,000 to $1.5 $1,000 move. So that is what we're looking for in this case here. All right, so it's all set. Let's come back to this in a few hours. So Bolo de Senora asks, please could you explain when is it safe to keep casting 2H ATR ladder to catch these small trades like you're doing? So this happens within your hourly dragon skin as long as it is puffing up nice and thick and looking aggressive like the dragon it is. However, you're seeing a retest of the baseline, which is a short signal with your stop placed at 55.26. Okay. on these technicals. So when you get the first flag, it is safe to go. Forget about 2H. You can actually go. So if it's a the reason it's a 2H is because when you get a flag, you can expect maybe 2-3 candles of 1 hour, and 1 hour ATR. That would be double on the 2 hour ATR. So these two candles over here, for example, 1, 2, they drop by 2 hour ATR range. You get a pickup, and you have a little recovery over here. $1,000, you can sell it. And the next time it happens again, you are casting your 2 hour ATR. It over exceeds it a little bit. You're underwater, but it recovers back to the baseline. And assuming your entry is somewhere here, you have another 5-pointer, 6-pointer, or whatever. And if you held it maybe up to here. And so as long as we're in the reserve, when this thing starts to thin out, and we get 1, 2 flags, maybe 3, 4 flags, that's when it's not safe. So here, yeah, the window 1 hour. So this is why there's a window, because we're facing the resistance. So if you wanted to go short, right, like right now, if you wanted to go short, take note of the long-term trend flow and understand that the risk is high. However, the setup is a setup, and so if you went short, baseline reclaim here, right? Let's reiterate just what we did on a 5-minute, just 15 minutes just now. Reclaim here. Short entry here, take profit here. $300, $400 move. Now, reclaim here, short entry. Now, here, stop loss. Right here at 55.50. Take profit target. Back to the 23 fib or lower, $800 move incoming. This is going to curve down and potentially push the price lower. So that is your play. If you get stopped out, make sure that you're sized accordingly so that you don't lose a chunk of your account. And that is all you need to do. And every time you see a setup like this, you can go long. Or do what I do. You see a short setup, estimate by how low will it go before a swift rebound, and just sit there and wait for this window to close, wait for it to go lower over here, cast your ladder, close it to TC, and you should be okay. And that's how you play these. Window 5-3. No. The window is between the price and the top of the blue line over here. So right here. So you had a pump over here, and this is considered a window. We never came back to it, and the market is going to get punished for that. It will come back for it because of that. Like the greed kicked in, and everyone was like, oh, long, and they pushed it by 5% over. So what's going to happen now is we'll probably revisit this level and wipe out all these guys in this range, potentially. So this is the window right here. This is the window here. What, this window? I'll identify like windows that are so here's one here. Here's one here. There's potentially one here, but here's one here for sure. There's one here. There's one. You see how there's like an area where the price is and the yellow band is? That's a window. That's a huge window. Here's another window. Here's another window. Here's another window. And maybe this one here, but it's too small. Here's a window, and here's a window. There's a window here, definitely. So they're more like here for sure. So these are the areas where you have the EMA and the price separated by this void that you can easily identify where that is. Now, of course, when you're looking at a dump like this, right, and a short signal that breaks below, and you have a window, like, be very careful about longing that, because you just started to drop with momentum accelerating. Whereas in other cases where you had same here, the momentum is accelerated. With the other cases, like here, the momentum has accelerated and is now going down. So you close that window. Momentum accelerated here. There's a divergence now, right here on RSI, divergence on lightning, divergence on the momentum wave. So this has the potential to wink and drop a little bit. Divergence is a sign, a warning. It's not telling us to go short and trade this immediately. It is telling us that warning, warning, warning. We could be looking at extreme greed over here. And so there's a chance that the market will bleed out and flush them out. 2 hours, also, price is going up. Momentum is kind of like trending sideways or slightly down. So this 2 hour window, right? Here you go. So if you were to go long, you would go from where the window is expected to get closed. Expect that there's a little bit of support. So your first ladder entry is somewhere around here, and your last ladder entry is somewhere around here. So you're expecting this to happen.
What about those windows under it?
Okay, so you're expecting to get a little filler over here. 1,400 points, with an average bringing you down to the baseline. Now, the first tap of the baseline, and if the pyramid shows up, is an automatic long. So you are already positioned for that. So you can look forward to that if you're setting up for a long there. Now, this pump here, 1, 2, 3, 4, 5 candles later, if it doesn't have a follow through, you know it's going to fall. That's why if we're to be long here, and if it's not continuously moving, there's no follow through, we usually get out of these positions. All right. Okay, guys, I gotta go eat something, and I'll come back to this in a few. All the best, good luck, and stay put. Wait for these setups to come your way. Ignore the market. Screw it. It's going to give you what you want. Just be more patient than the market itself. And if it doesn't, watch your Bitcoin go up in value and give it some space, let it develop, and then see if the setup is there. If you absolutely must, go to lower time frames and try your luck there. Just make sure that you exit based on your ATR value, not some level of support or resistance. ATR only. So got in and you got out at, speaking of ATR, where is it? Wait a second. Wait a minute. Why is it off? Why is everything off? Sometimes I feel like this thing doesn't save settings or something. I don't know. Okay, so here we go. We turn these off, and you have your values right here. The 2 flags right now already, with momentum pushing lower. Dragon Skin failed here. This, I don't know what this is. Don't trust it. If it goes down, well deserved for anyone that's long here.
You got that window alone. Short.
So 250, slice this by 2 if you want to be sure. So price moves by 130 points, take profit. If you're trading this 15-minute chart, always understand that you abuse ATR with your entry anyways. It's not the best entry. It will never be. it's always near the median somewhere where price will move away from. Most likely, the minute you go long or short, the next candle will probably be a negative candle, but then the follow through, the next few candles should automatically put you in profit if it's a good entry. And you can identify these good entries by doing so, where your ATR close to the baseline. By the way, your entry cannot ATR is not a directional indicator. It doesn't tell you that doesn't matter where you enter, you can exit 200 points later. You have to be directionally correct about where to go for this. So your stop is right here, and if you went short, it's already made the target. So these two candles, check this out. You can already take 90%. If you went short, stop loss here. You can exit 90% inside EQ1. Keep your 10, because if that spills, that 10 is going to give you a nice profit if it goes all the way down here. We don't know that, but if it doesn't, your stop is here. And once price moves away a great number of points from your entry, then you can move your stop to at entry or slightly lower or above your entry, so that you never end up giving anything back to Bybit, the exchange. So I think it's pretty clear. And if you're not sure, put one contract in it for the sake of ranking yourself as a market participant, that you're doing this regardless. So a few contracts.
I like that idea.
Now look at that doji printing. Look at that. So my orders are sitting. So we have a window here that's going to get wiped, 54.47. We go a little lower, and my orders start get picked up on the punch out strategy. Now this is not the best approach right now, because technically, way from the low, this candle was more than a punch out. This was an uppercut. This was an uppercut that Bitcoin pulled here. So what am I doing with the little punch out strategy here? I don't know, because it already punched through everything that it had to. However, on higher time frames, this is only the beginning. So a little cool off retracement, like I said, this is what I'm counting on. That's the plan. If it doesn't work, we'll manage it, and I'll show you what to do about it if it's not in profit. But I guarantee you this is going to be a profitable trade. You just have to wait for it, and don't freak out if it goes slightly underwater. I survive 1,000, 2,000 points away from entry, and it takes 4 to 8 hours to let the market basically calm down again, and me not freaking out. I can just sit in there and wait for it to recover. So it moves by these thousands of points per day, intraday, right? On lower time frames, higher time frames, whatever. But yeah, go half a candle long. Go accumulate here. Understand that this reversal is a good sign for us, but we're going to be taking a walk in the park before resolving to the upside, truly, as the market believes. And you're getting paid by staying long, because the majority are short anyways. So for these small tiny setups, you have 7 hours, and it's not a big number, but it's still better than paying shorts for the privilege of being long. What about it? Karatu, thank you for the bon appetit, but 5/8 candle rule? No, that's a 3. What, the take profit? Take profit or exit? What are you talking about? No. 5/8 candles, as in, look, let's not be rigid with this. Your entry is here. 1, 2, 3, 4, 5 candles is good, but you also, this is just a visual aspect of it. You're looking at the ATR here, and you have to understand that this candle makes like 100 of these tiny little candles here. So that's already taken. So whatever's left over here, right, this is not sustainable. Okay, so you're not waiting to see 5, 8, 9 candles. I'm just saying an approximate take profit range. So for example, 1, 2, 3, 4, 5 on a 4-hour candle chart. I mean, you have to say that we're bottoming out, that we're taking profit here. This is as far as it goes, right? But you're looking at the ATR to take profit, and how you take profit we have different ways. We have, take 90%, leave 10 running, manage your stop loss. We have take 100%, wait for the next setup. We have take 20% a little bit if it pumps, and then reload again with the ladder slightly lower as it corrects a little bit. Goes up again, take another 20% out, and repeat that. That's for more active traders. But under no circumstance are you counting literally candles and saying, I'm not taking profit unless it's 5 minimum. That's not smart, guys. Let's not do that. Please understand that this is just, it's how you measure exhaustion here based on literally the 20 sample period. 20 periods over here, take it as your sample and see what happens on average. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. You can see how that's an average exhaustion point for a 4-hour time frame. 20 candles, 20 sample period, 20 periods. That's all you need to sort of back test this. But don't hold on to it if it's less than 5. If it's more than, basically if it doesn't meet your 5 to 8 target, don't worry about that. Look at this number all the time. Okay, look at this number all the time. Yeah, 3 to 5 candles. So away from your entry, if it's not moving or if it's going the other way, 3 candles, 5 candles later. This is my rule that I have developed over the years, guys. I'm telling you that you can use it, but you can also create your own set of rules in terms of how you sit in front of the charts and like what you do. Do you have the time to be 3, 5 candles long and be around to babysit that? If you don't, you have to come up with your own set of rules. This is a template. And what I've found is that a good entry performs instantaneously. A bad entry is identified when 3 to 5 candles later, nothing is happening directionally, how you're positioned, right? So I just cut that thing right away, because the market's telling me like, I'm hesitating. Because if it really wanted to, away from that entry, if it was a good entry, the market would simply continue moving in that direction, and there would be consistency. If it's not, I know I'm stuck in a range, which drops this number down to between 1 to 3 candles. Usually I exit on 1 candle. So if I'm long here, this candle pumps, like I'm 90% out. If I'm long here, this candle goes 1, 2, 3, it comes out, I'm out on this candle. Then I'm long here, it dumps instead of pumping. It goes 1, 2, I'm out. If this goes down, dumps, and then 1 candle, 2, 3 candle is not recovering, I'm out, and I take the loss. So try to like navigate the market using these simple, helpful tips, but by all means, don't make them be rigid rules that you cannot modify or you have to. Because the count will always change. I'm giving you the average. And for most, the safety here, the safety rule is take profit on your ATR target. Simple as that. All right, build up, take profit. You will not regret it. You'll probably have the best entries and exits out of all if you use ATR. And you don't worry about any levels, any support, resistance, nothing. You just get a good entry, price moves, 1, 2, 3 candles later, 5 candles later, it makes that target distance, take it. Also, let's say your entry is here, and this is your candle. And your entry is here, the candle goes down, gives you an entry to go long, right? But it continues to go down. It continues to go down. Remember, this is your entry to go up, but price went down 3 candles later. Now it's showing signs of recovery and it's coming back for you. The reason I break even on this trade and don't hold it in the anticipation of my original anticipation to go up is because this is your entry. 1, 2, 3 times the ATR away from your entry. That means price will need to make some effort to go from this level to 1, 2, 3 to get you out. So if you hold, that means you're looking at this pivot low and you're saying, my entry was here, but my actual entry should have been here. And if my entry was here, price already moved by 3, 4, 5 candles away, which double, triple, quadruple the ATR value. And if I'm to hold it here and it will continue going up, that means it'll be 5, 6, 7 times the ATR, which is not realistic. So if you got a bad entry, price comes back for you, exit that sucker. Don't hold it. The market is giving you a chance to redeem yourself, okay? It's giving you a chance to exit, because if you have now you have price dumped, you have an entry, it pumped, second candle pumped, second candle pumped. Okay, now take profit on that ATR. Go 90% here. Move your stop loss above your entry or at your entry and watch what happens to the rest of the 10%. So this is how you move through these setups from point to point by looking at the number by which the candle has moved away from your original entry. So let's say if you put a single limit entry here and it bounces by 1,452 points up, you're automatically exiting. If, however, it goes down another candle by this much and another candle by this much, now it has to, from the reversal from here, it has to move 3,000 points up. For you to be in profit, it has to move by another 1,000 points up, which is a long time. So if your entry is here, price goes lower, makes that ATR, doubles it back to your entry, exit at break even immediately. Immediately right here, exit at break even, okay? Because you don't want to test the market and act like it owes you. Take what you can and run based on this ATR number. However, if this falls down here and exceeds the ATR value, so always double it with the ladder. So consider that 3,000 point ATR drop is possible. If you get in there and price rebounds, you probably have a good entry because, one, it exceeded the ATR value. Instead of dropping by 1,000 points and 500, it dropped by 3,000 points. So double that. 3,000 points, and it caught some support over here. If your entry is here, you can wait for 1,400 points later to exit 90%, and then see if it gives you more for the remaining 10%. Make sense? All right, guys, hold on to this and play it. We'll talk later. Hopefully this has been helpful. And no, it wasn't recorded, unfortunately. I got caught up here. So take care and see you in a couple of hours.